Welcome back, investors, to Ticker Time News. I'm Adam. Thank you for joining me. I am glad you are here. Remember, the most important thing is answering your questions. So if you have a question, leave the ticker symbol and your question in the comments. We'll go over it live during the show, or I can follow up and give you an answer in another video. So always feel free to ask a question. That's what we are here for. Now, the S&P 500 rose 1.6% on Tuesday in a relatively broad-based advance. The Dow Jones Industrial Average, my goodness, tongue twister there. We're live. There's always a mistake. Average kept pace with the major benchmark index, up 1.5% on its own, while the Nasdaq totally outperformed everyone else, gaining 2.2%, and the Russell 2000 climbed its own 2%. Now, 10 of the 11 S&P 500 sectors closed higher, with gains ranging from up 0.6%, which was utilities, to a top of up 2.9%, which was consumer discretionaries. The exception, though, was the energy sector, which lost 1% amid a pronounced weakness in oil. And oil was down quite a bit today. It was down 5.7%, and it ended up closing at $102 a barrel. So it has dropped, but it seems to be hovering right around that $100 barrel mark. So, or I should say, and natural gas. Natural gas also dropped big today, 8%. Okay, let's try to get back on track here. Now, the broader gains helped the benchmark index close above its 50-day moving average, which is at 4416 after a flat opening, I would call it. And let's look at the chart here and talk about this for just a moment. We have this blue line right here on the chart, and it's sitting right about 4,400, okay? And then we have this purple line up here a little bit higher, and it's sitting right around 4475, okay? 4475. And for over a week now, I've been talking about the S&P 500 moving sideways, and that's what the market has been doing. We get to this bottom somewhere around 4,400, maybe a little bit lower than that, and then we bounce right back up to 4475 or around that area, and then come back down. Could this week be a little bit different? Could we get a little more momentum? If we look at the RSI down here at the bottom and the MFI, which is the money flow index, both of them are at lower levels, right? The RSI, which is the top indicator here on the bottom underneath your candles for volume, and it's at a local bottom. Right now, it's sitting at 44.8. When we got to our peak on March the 29th, where we were up in the 4600s for the S&P 500, the RSI at that time was at a 68.9. So we've got several points that we could move up and break above this 4475 line before we get resistance and then come back down. That's an option. And money flow also kind of supports this too. It's also in a local bottom. It's not terribly low. It's at a 34.7, and both of them are starting to have this little curl at the bottom, a little, like we found the dip. Right? We found the bottom, and we're starting to come out of that type of look. And that's because we had a nice big green day today, up 1.6%. But last week on Thursday, it was flat, but still green ever so slightly. So with this, can we get enough momentum tomorrow to break above 4475? If we do, then there's a good likelihood that we could go up to the 200-day moving average, either find resistance there at 4496. That's where the 200-day moving average is sitting at right now. Or we could possibly go up to the real resistance, which is sitting somewhere between 4580, 4590. But that would be the real resistance, and that would be a good time to start shorting using a ticker like SPXS. S as a possible way to short the S&P 500 as it reaches that resistance and comes back down. That's definitely not the place where you want to go long on the S&P 500 when it's in this area of 4580 to 4590. You would want to watch for a reversal to see it come back down. Now, can volume maybe support this momentum on Thursday? And I know Thursday is not a big day to compare things to. We have a lot of earnings this week, and that can affect the markets in big ways. Last Thursday was the day before holiday. Volume was short. Not a lot of action going on. And we can see that in the chart here. Today's volume almost got back up to our median volume or our average volume over the past trailing 5, 10, 12 sessions, which has been coming down. But today, volume has gone up a little bit to reach that average volume. So maybe, just maybe, we do have some potential here for momentum in the S&P 500 to break above this 4475 line. And this has been a very important line for several sessions now, and it's been resistance. So with the RSI, have completely come down to a local bottom, the money flow is coming down to a local bottom. You have a tail starting to turn up on both of those. And today you have higher volume getting up at least to the line of average volume. Those are all kind of signaling that maybe, as long as we don't have any crazy headline news that drives the market lower tomorrow, maybe we could have enough momentum to get above that 4475 for the S&P 500. And if we go look at the 5-minute chart for today, you'll be able to see that we closed at almost the high for the day. The high for the day was reached, what is this, about 15 minutes. This is the 5-minute chart. About 15 minutes or so before the close, and the S&P 500 reached its high. So it almost closed there, but it did have a little sell-off into the close, which is typical. Now, you see this morning, it started out not very long, maybe 15, 20 minutes or so, where the market was just kind of flat, and then it just took off, bam, and ran. And it was all pretty much done. By the time we get to 10:50 a.m. Eastern time, the market's already risen for the day, right? And then we move sideways for the rest of the day, slightly down before a final run within the last couple of hours of trading before the final sell-off into the close. Now, you can see this purple line is right there. Our high today on the S&P 500 was 4463, and we closed at 4462. So not that far off. And I would like to add that today's high was just a few points away from this purple resistance line. If we get a burst like we had this morning in the S&P 500 tomorrow morning, then I think we'll have enough momentum to get above that resistance line. And I find that interesting. But then again, remember, if we do break above it, we are looking at the 200-day moving average, which is at 44.96, and the big resistance area at 45.80 to 45.90. That's the big resistance. So as I've been thinking and saying here, we can move sideways for months, right? Until the Fed changes its course and starts to sound more dovish and not so hawkish, then I think we're going to all-time highs, okay? The video that I released last week talking about, are we at peak inflation? If you haven't watched that video, it's one of the most important videos that I have done in quite some time. It sheds a whole lot of light on where we're at currently, which can help you better understand where we are in the market right now and what could be happening. Because my view is, if we have reached peak inflation in March, if that was really it, peak inflation, you know what that means? That means our economy is going to start slowing down. Now, I already believe in my thesis that the economy is going to slow down. The second half of 2022 is going to be slower than the first half of 2022. And then if we get into a recession, it'll be sometime in 2023. That's my quick take on it. And if we are at peak inflation, that means we're at peak growth for the economy. And if inflation does start coming down, or at least holding where it is and not growing by gigantic numbers, then the economy is also stalling. So cheering for this peak inflation narrative in March, I think, is also cheering on, maybe unknowingly, a top in the economy. And we're going to have a slowing economy going forward. So just a couple things to think about there. Watch that video. I'll actually, when I'm done with the live stream, I'll put a link in this video for that inflation video. It's titled Peak Inflation. Have we reached peak inflation? Really good video to watch when you have some time. It'll really help you understand this current market environment. Okay, so after the slow start happened amid, I guess I would say, after an increase in interest rates and a sluggish reaction to earnings reports, and a view from the St. Louis Fed President Bullard, who is, by the way, an FOMC voter, okay, that the Fed funds rate, this is what Bullard said, that the Fed's fund rate should be at 3.5% by the end of the year. That's aggressive. That's hawkish. The Fed's fund rate, the two-year yield right now, it rose 11 basis points to 2.58%. And you know I like to do this with you so you can learn and do this at home. If you want to look at the 2-year on TradingView, and there is a link in the description to a free account in TradingView, you type in US02Y. That takes you to the 2-year yield. And then you can see it's a big jump today. I said it was at 2.58, and it's actually gone up since the last time I looked, since the close, I should say. It's ticked up a little bit since 4 p.m. Eastern Standard Time. It's now at 2.598, so it's gone up a little bit more. Now, the 10-year, it actually rose 5 basis points to 2.91% after flirting with 1.93%. My apologies. In the wake of better than expecting housing starts and building permits for the month of March. And we're going to talk about that in a moment. But let's look at the 10-year. You type in US10Y, and you use the top one here. And over here on the right-hand side, you look in for the TVC, okay? And that takes you to the 10-year Treasury. And you can see that that is up 2.94. Now, I misspoke there when I said 1. It closed at 2.91%. It is up now in the after hours a little bit, but it did flirt around with the 2.93% in the wake of better than expecting housing starts and building permits for the month of March. We're going to go over that in just a moment. Now, the stock market had plenty of reasons to stay cautious, but the counterintuitive price action suggested that the rally keyed off a contrarian mindset. And to be fair, the lower oil prices likely helped, as did the less hawkish commentary from Chicago Fed President Evans and Atlanta Fed President Bostic, both of whom are not FOMC voters this year. So they can't vote this year on what the Fed's going to do with interest rates, but they will be able to vote next year on what the Fed does with interest rates. And they're going to have a tough time this year and next year, right? Because if the recession comes in 2023 and they're voters in 2023, they're going to have to make some tough calls. But they did sound less hawkish, although they're non-voters. So take that with what you want, but that did help the market today. Now, shares of Johnson & Johnson, ticker symbol JNJ. They were up today 3.1%. Johnson & Johnson hit a fresh all-time high. A fresh all-time high. And I'm going to give you a coin of the same heads. A coin with heads on both sides. If we look at Johnson & Johnson right here, and we look at their earnings today, okay? They reported a $2.67 a share EPS, or earnings per share. That was a beat by 3.28%. On revenue, they came in a little light, about $200 million light, at $23.426 billion. That's what they reported. They missed by 0.84%. But it wasn't so much that they missed on revenue. And to be quite frankly, a lot of earnings today missed on revenue. They beat on EPS, but they missed on revenue. Now, investors in Johnson & Johnson, they look past something that I always feel is a big deal with earnings, and that's guidance. Because the stock market, remember, is nothing but a play on what's going to happen in the future, right? That's why when you're investing in stocks, things can get priced in. Well, Johnson & Johnson investors must not have heard this part about guidance, because investors in Johnson & Johnson are putting all the focus on the company's EPS beat instead of its below estimates, below consensus for its fiscal year 22 EPS guidance. See, Johnson & Johnson is guiding down on EPS for the whole year of 2022. But yet investors are celebrating. I don't know about that one. Did they miss that part? Or are they ignoring that part? Or do they just not care about that part? You let me know in the comments what you think investors are doing, ignoring, overlooking, or what about guidance being lower. And also, and this is the coin with this double heads here. Johnson & Johnson is a Dow stock, right? It's in the Dow Jones. Well, a fellow Dow Jones component, Travelers Insurance, right? Ticker symbol is TRV for Travelers. The Travelers company is the parent company. They dropped 5%. But when we look at their earnings today, EPS reported at $4.22 a share. That was a 17% upside surprise on revenue of $8.367 billion. And that beat by 4.2%. But yet, investors did not reward Travelers. And you might be asking, well, what about their outlook? Their outlook was okay. They didn't come in with estimates below. So what was the deal there? Why did investors take profits here and sell off the stock by 5% when they beat top and bottom line and had decent forecasts? See, it doesn't make much sense there. Two Dow stocks, one of them is getting away, one of them was pulled back. So a real mix of reactions here to earnings that don't exactly make sense, if you know what I mean here. Okay, now moving on to airline stocks. I did a video recently about the airline industry. I did a video about Spirit Airlines possibly being bought out and there being a fight over who gets to buy them out. But airline stocks extended their recent outperformance following the removal of the mask mandate for airline travel and public transportation. I saw many videos across Twitter of people on airplanes, and over the intercom they announced that there is no longer you no longer have to wear your mask on board the airplane, and there are cheers and clapping and everyone is throwing their masks around and being just extremely happy that they don't have to wear it. And to this point about airlines, there is a ton of pent-up demand for air travel, a whole bunch. Now, there's one thing to be said about ticket prices and energy costs for jet fuel, right? That's rising. But there is a really, really big pent-up demand. People want to travel again. And we can see this in the stock market by going to the US Global Jets ETF. The ticker symbol is JETS, JETS. All right. It rose 2.8% today off of this excellent news. And I've got one more company I want to talk about real quick, and then we'll wrap this up. Plug Power. Ticker symbol is PLUG. Now, Plug Power had a big announcement today. They were up nearly 10%. Big day for Plug Power. And they will supply Walmart of all places, with green hydrogen fuel. So Plug Power will deliver up to 20 tons of liquid green hydrogen per day to power the material hauling forklifts, lift trucks, however you want to call them, across Walmart's distribution and fulfillment centers in the U.S. Now, there was no financial details disclosed, but Plug Power did say that the deal is one of the first green hydrogen supply contracts that they have. So that's looking really good for Plug Power. Plug Power reports earnings. It looks to be around May the 11th, give or take. It doesn't look like it is final. At least here in TradingView, it doesn't look like it's final, but around May 11th. And we should definitely get more detail on the Walmart deal during the earnings call. So Plug Power looking good. That's great news. Okay, on the economic front, we got to talk about the housing market, and this will be it. The housing market, we got some data today. Housing starts increased 0.3% month over month in March to a seasonally adjusted annual rate of 1.7 million units. While permits, that's when you go, okay, so building starts is when you start building it, right? Permits are when you go get the paperwork so you can start to build it. Permits increased 0.4% month over month to a seasonally adjusted annual rate of 1.8 million. So the key takeaway from this report, or from both of these reports, is that the upside was driven entirely by multi-unit activity. Starts for single-family homes. You don't want to hear this if you're in the market to buy a single-family home. But for single-family homes, they were down 1.7% month over month. In permits for single-family homes were down 4.8% month over month. That's reflecting the challenges builders are facing with supply chain issues, rising costs for both land and labor, and the dent in homebuyer confidence and affordability that has stemmed from rising mortgage rates. As many of you know, I have been in the market looking to buy a home with my family. But I myself have now been priced out of the market due to rising interest rates. And many people around the world, here in America, are in the same boat, getting priced out of the market because interest rates are going up so quickly. So it's not a good thing, for sure. The feeling of, oh yeah, we've got our pre-approval, we're ready to go, and then to be priced out of the market, it's a tough feeling. It's really tough. Okay, moving forward to tomorrow, investors will receive existing home sales for March. That's going to be curious to look at. We also get the weekly MBA mortgage application index to look at tomorrow. That'll be interesting. It was down last week. Could it be down again this week? It's a good possibility, if you know what I mean. Okay, so that's going to wrap up here what I wanted to talk about. So help us out, and that really does greatly help us out if you smash that like button, share this video wherever you can, and join us in beating the market by clicking the first link in the description. And if it's your first time watching, well, click subscribe. We'd love to have you around. For Ticker Time News, I'm Adam. Thank you so very much for watching, and I'll see you in the next video.